Good morning, young Padawans. How you all doing? So today we are going to be talking about Wednesday, 3rd of June 2026, a recap on GBPUSD and possible live execution. So right here, let's hide this. Let's do a quick weekly recap. Right here, this is our Monday's price action. This is our Tuesday's price action right here. This is our Wednesday price action, and currently we are still on Friday price action, but it hasn't given an entry model by the time of making this video. So Monday, in my own terms and opinion, Monday was a ranging candle. Then Tuesday manipulated Monday's high, closing back in the range, signaling a sell. And what does happen when we see this kind of opportunity on the chart, in which one side of a higher time frame candle ranges, which is our Monday right here, then manipulation occurred, aligning with the order flow. It's very important for the market narrative to be aligning with the order flow. Then Wednesday distributes, expansion lower. Thursday right here, I'm anticipating either Thursday to complete our draw on liquidity or Thursday to consolidate around this area. Then Friday taking Thursday high and reacting from this fair value gap right here, or possibly this other block right here, or the low of Tuesday. If you have watched my previous video, you would know I used to always say that previous day lows and highs can be used as key levels. So right here, we going to the lower time frame, we can possibly see a 4-hour order block or a 1-hour order block, and in a general concept, we do call this low right here a market structure shift, if you will find it on the lower time frame very well. So going to the lower time frame, let's stick to the 4-hour. Going to the lower time frame here on the 4-hour time frame. Let me on this back. Going to the lower time frame right here. Oh, I haven't added this. Let's go back to the daily time frame to set something real quick. Oh shit. 4-hour time frame. Sorry guys. So 1-hour time frame. Let me just set this thing very quick so you can understand my point, and it will help to know where price is actually reacting from. Monday started from here. Nice. So that is Monday. Sorry guys. Okay. Day 3 is Wednesday. Right here. Day 2 is Tuesday. Right here. The 4 is actually Thursday, which is right here. And the 5 is Friday. Nice. Now let's clone this and mark out day 1, Monday. Exactly. So I was talking about how markets manipulated, because observe carefully in this chart, which I'm gonna actually talk about. Monday, which was the manipulation. Okay, let's just go back to the daily time frame, because a lot of you guys are asking me how I got that Monday move. I was already anticipating that price movement since Friday, and it's clear right here. It's actually clear right here. Nothing is random. Nothing is random, guys. Let's delete this. So let's calm down and read this carefully. Expecting week 1 of June to either be the accumulation phase or react from the midpoint of our rejection block, which it actually did. Now let's see the second caption. We can see it clearly that Friday took out both Wednesday and Thursday high and closed back in the range, so our bearish momentum has been confirmed. Now, after reading that carefully, let me explain that statement, what it means. So this is what it means. This is our Friday's candle range. That is week 4 of the month of May. And going to the weekly time frame, which I would like you to do, give yourself the assignment, go to the weekly time frame and observe where this high of week 4 Friday candle was rejected from. So Friday candle range taking out both the high of Wednesday and the high of Thursday. It's something that was signaling me to sell the trade, and it was actually respecting the order flow. I didn't just sell the trade. Now on this Friday candle range, going to the lower time frame, I figured out an order block, and that was where I traded from. If you check the foresight I sent carefully, so this midpoint, I had a late entry there, so I had to refine my entry and trigger from a 15-minute order block, and boom, 50% of this candle range first, then the lower zone. But if you are like, oh, I can't actually take 50% of the range right here, I want to swing, because yes, I've seen a CRT confirm, I want to swing to this low right here, bro, just look at all the profits you have already made here, and for price to come back and liquidate you. It's actually a new week, so on a Monday ranges, on a daily Monday ranges, don't expect much from the market, and same with the Friday range. Always expect much from the market when a manipulation has occurred, a manipulation zone has occurred. So emphasizing on this weekly time frame, Monday range, Tuesday manipulated, Wednesday dumped lower. I've already explained what I'm anticipating for Thursday to do, reach withdraw liquidity quick or consolidate, because we had already a long expansion, and I'm still anticipating this zone right here to be my final draw on liquidity. Not actually my final draw on liquidity, but my draw on liquidity that I'm still anticipating on. And this right here is the midpoint of our weekly CRT candle range. Let's just go to the weekly time frame so I can show you guys clearly what I mean. Here on the weekly time frame, you can see what I mean clearly. So if we were swinging this trade here, will be our second target, our second swinging target, and here will be our third swinging target, this zone right here. Then our final target is actually here, 18RR, depending. So now let's go to the 4-hour time frame. Here is the real deal. On the 4-hour time frame, I've already explained Monday's price action, so if you haven't watched that, go on my YouTube channel. It's arranged properly on my YouTube channel. It's under a playlist called Live Trade Breakdown. Yeah, trade price action breakdown, if I'm correct with that. So this is Monday's price action, and this is Tuesday's price action, and this is Wednesday's price action right here. So a quick recap on Wednesday's price action. Wednesday's price action actually offered an entry model, but I wasn't careful enough on the chart to enter, because I have this firm rule on my execution. I always execute above the open when selling and below the open when buying. So right here we can see clearly that Monday offered a 1-1 5 and 9. No, it was not actually Monday, it was Tuesday. So 1, which manipulated at a key time of the day. It's not actually nice to be disclosing this key time, but I want you to go deep, think deeper, think deeper, don't think like a random trader. So 1, not only taking out our Asian high, but also taking out our Monday's high, and our Monday's high is a strong liquidity zone, because I was anticipating this liquidity to be swept before price go lower. Then, since one has been taken, the main liquidity has been taken, it is hard for price to retake out this liquidity. But if it takes out this liquidity right here, it's actually normal, and which it did. This trade was very scary. But what was he doing that time? It was 5 was accumulating, so 9 can manipulate 5's high. Now observe carefully right here. If we mark this low, because it also says that CRT candle low or CRT candle high can be used as key level for a trade idea, and this carefully can be used as our key level. Yeah, this carefully can be used as our key level, and it's what sponsored the Wednesday's price action. I wasn't really observant. If not, I could have shared this trade with you guys. But going to the lower time frame, maybe the 1 hour time frame, I would know what key time this expansion started happening from. So this is our key level, because on Tuesday's price action, this is randomly our breaker block. Exactly, this is our breaker block on Tuesday's price action, and it's also a key time low. Very sensitive. Don't joke with time, bro. Don't joke with time. Now going to the Wednesday's price action, what happened right here? Because I'm only putting majority of my focus on the 159 concept when coming to the 4 hour time frame. So this is the 1 a.m. candle right here, and this is the 5 a.m. candle right here, and this is the 9 a.m. candle right here. So what happened when 1 a.m. candle range wasn't able to take out our Asian range, but this key level is valid? It was reacting from a key level, a very sensitive zone. What do? You trigger your trade from there. You don't need to set trading as a fixed rule. Yeah, I know about having your own personal rules, but your own personal rules have to be beyond what the market is actually offering. Rules like you sell above the open and you buy below the open, that is a firm rule for me. So, but this is a key level. Take the trade. Don't be scared. Execute your trade without fear, because there is a valid key level. There's something you see. So let's just ask ourselves a sincere question. Let's say you mark out this key level and you saw this trade not happening at a key time, and you didn't execute it, and it made this kind of large expansion. To be sincere, you won't be happy. You will be like, damn, I saw this thing coming. So 159, and there wasn't any manipulation right here, but the lows were used as key level. So if we miss this 1 a.m. move, the low of 1 a.m. can be used as a key level to sponsor 9 a.m. price. It all depends on how you are thinking. It all depends on how critically you are thinking. Now let's go to the 1 hour time frame. This video is actually getting longer. Let's go to the 1 hour time frame. And exactly, but the real reason why I said Wednesday didn't give me an entry model was because observe this open right here. This open right here. If price was able to stab above this open, I could have executed, to be sincere. But immediately price opened, Wednesday's price opened, the dump began. So I wasn't careful enough for this key level. If not, I could have executed the trade from this candle range right here, because it's at a key time. I won't really care about the opening price because it's actually near the opening price, and I will give it like a 10 pip stop loss maximum or a 5 pip stop loss maximum. So let's project it from here. Let's say we entered at exactly the key level is being tapped, and our SL right here, maybe a 6 pip stop loss or a 10 pip stop loss for a safer stop loss. Let's just say a 6 pip stop loss, and we target this low right here. Bro, 8R, bro, and it's actually nice. It depends on how you what word should I use for this? It depends on how you capitalize yourself on knowing when to enter the trade and when not to enter the trade. I missed this trade right here because I have this firm rule that I will always sell above the open and buy below the open, not realizing this key level right here. And what did I say? The key level was a breaker block, which the general concept calls a market structure shift. Yeah, remember on the 4-hour time frame we said this thing was our a key times low, a key times CRT low. Go to your chart, dig deep, and know what low is this for your own lesson. I'm disclosing a lot of my knowledge right here. So with this alone, it can trigger the way you think about the market. It can trigger something in you that will make you understand the real language of the algorithm. So that's just it, and that's just what is behind Wednesday's price action. And I said something earlier that the 1 a.m. candle range low can be used as key level, which price did. 1 a.m. candle range low right here, boom, and price tapped at it at a key time, and this is exactly what we want to see. When price tapped on a key level, price first tapped on a key level, we want to see another candle range manipulate the previous candle before we execute. So for a safer zone, when price tap on a key level like this, just wait for another candle range. Be patient, wait for another candle range to manipulate as a beginner. But to be sincere, in my own case, I will take the trade from here or still take the trade from here due to experience. So price took out the high, and boom, you can position yourself here, and this is a 1-hour CRT candle range. High, low, boom, target, just like scalping the trade and taking quick profits. All depends on you. So go deeper to your charts and understand the logic behind these things. Don't just trade, don't just execute trades without understanding the idea behind those trades. Don't just execute trades and not understanding the idea behind those trades. So that will be all for today, and we are hoping for better entry position for the Thursday movement. But if we didn't see any entry model on the Thursday's price action, then I think we are done for the week, and we will reposition ourselves for next week's price action. So for the live entry, we actually took the trade live, and this is it right here. It's still running. The trade is still running. Remember, we didn't execute any trade on Wednesday. This was my Monday's trade. You can observe carefully the Monday's trade right here. Sorry guys, the Monday's trade right here, and the Tuesday's trade right here. And it's always necessary to take out profits at necessary places. Don't just fish your price that you want to make money somewhere. Fish your CP zone and take profits. The market can do otherwise. So that's it for today, guys. And I really appreciate if you found something insightful. Like, share, share, comment, and make me talk about price action breakdown that I will explain more about, so you all can get a more knowledge on this price action and how the market narrative have been formed. So good luck and good trading. Have a nice day, young Padawans.